What's up, visionaries? Today, I want to talk to you guys a little bit about are you, or let's just say we're going to talk about identity. Are you an investor or are you a trader? It's one of the most important things that many people need to understand when it comes to investing in cryptocurrency, right? Many people do not know the difference in between whether you're an investor or a trader. So before you buy another coin, answer this. Are you an investor or a trader? This isn't just about strategy. This is about your identity. Choose who you are before the market chooses for you. What does this mean, right? So many people get involved in this, and this is why I'm making this video, is because many of you would ask me about all these things you see online. You'll send me videos about the project you're investing in. There's many things that people do. What I'm making this video for is because one of the most important things is that you have to know who you are. It's one of the most important things that every investor or trader needs is the emotional intelligence of knowing who you are and what you identify as. See, because anytime someone just screams 100x or this project's going to be $10,000, you will just jump on it because you don't know what you identify as. Or you can look at these meme coin traders and they tell you that they made $90,000 off investing $1,000 when they're hedging and using leverage. See, you don't understand that. And that's why I want you to know the difference. And this video is going to bring the truth out. You're going to either talk about leverage or you're ignoring the market cap math. See, this is why it's important. You need a framework to filter the noise and fortify a mindset. It's one of the most important things that you need to know about investing is how your mind works, right? So now I'm going to tell you a little bit about the investor and the trader breakdown, right? So investors, their time horizon is long term. You work with the power of compounding interest. Think Warren Buffett, right? Traders are short term, right? What they do is they understand the market sentiment. They know when news happens, whether the market's going to be choppy or not. If you're somebody who thinks you don't have enough time to invest in crypto, trading may not be the best thing for you. And I want to clear something up before I finish the rest of this. This video isn't about trying to pick is investing better or than trading, right? Because anybody who does that, and I don't want to make contents, and I don't like to go back and forth about investments stuff because that's why it's part of, they call it personal finance because this has to be personal to you. See, this isn't about what I think because how I react to certain situations is going to be different. Now, I'm talking about whether we're in a bar and a fight breaks out. People have different mindsets all the time. See, what people need to start understanding is that the whole point of getting to know yourself and investing and your emotional intelligence and risk tolerance and risk management is getting to know yourself. So, what I'm saying is that certain people are just born to be traders, right? And certain people need to be investors, even though they like the appeal of trading, right? And I like to say it's kind of like some people just need the girl that's low maintenance, doesn't have to do a lot, doesn't want a lot, right? And some people need to have a girl that's fast paced, outgoing. Not every girl and every man is for everybody. Not every style of investing is for every person. You have to understand the duality of this, right? So now let's get back into it. The investor versus trader breakdown, right? So now the mindset of an investor, right? They got to have a calm framework. They're based, like, so what I mean is that, like, so me, when the market reacts, like the crypto crash that just happened, see, I wasn't leveraged. I wasn't worried about it. Me as a long-term investor, whenever the market crashes, I look for another buying opportunity to strengthen my position. That's what I want you guys to start thinking about. That's why the 3C method is talking about clarity, confidence, and conviction. And I'll get more into this later, right? A trader, their mindset has to be reactive. Because if you hear that Iran and Iraq are going to war, you should know crude oil is going to get popping. So what do? You get on the computer and you start checking the order books. You start seeing the market volatility. You start making positions. Do you go short? Do you go long? What timeline are you going to be using? There's a lot that goes into trading, right? They also have different kinds of tools, right? So investors' tools, like they use either fundamental research, some of them still use technical analysis, right? Because not just because you're an investor doesn't mean that you can't do charts. That's why I've said I'm not saying that one is different from the other. You can combine the skill sets, right? But still, if you're just starting out, don't get crazy. Just act simple, right? See, investors work on conviction. They understand the thing that they're investing in and they stay consistent. That's how you're able to dollar cost average because you're not doubting where you put your money the first time. That's really important. Traders, see, they use leverage, charts, technical analysis. There's a lot of tools that everyone has, is right? Even traders' biggest tool is macroeconomics. Understanding macroeconomics is one of the most important things. Like, and then you can get into reading the charts, but one of the things that helps your strategies in trading is understanding macroeconomics. I'm a big Nassim Taleb guy, and he always talks about trading all the time. And then I'm also a Warren Buffett fan, right? And so then there's different risk profiles that comes with investors too. And I think many of you beginners, especially when you're investing in something as speculative and risky as cryptocurrency, you need to humble yourself. Even like, and a lot of people, and I do consultations, and this is something that I'm telling you from experience of working with other people and trying to help them build an investment portfolio. A lot of people know all the right things to say, right? And it's like telling someone, I like to relate things to relationships, right? Because investing is a mindset, right? So a lot of people don't understand that it's easy to say I love you, but how do you know that the actions doesn't match the words, right? So a lot of people are like, oh, I'm going to be long term. I'm going to be long term. And then every day what you're doing is you're checking your portfolio every 5, 10 minutes, 30 minutes. The market pulls back 6% in crypto and you think that it's crashing. See, this is part of the things of why you need to forget about the trading side, right? You need to focus on investment. When the market corrects, not crashes, and 6%, that might not be enough for you to add to your position. There's a lot of nuances that comes with buying down your position. So if you bought something at $100 and it corrects 10% and it's at 90 and you spent $100 on the $100 and you put another $100 in, you put a 10% at, you draw down 10% on your average. You'll be at 95% then. See, and you're buying down your average. And that's just simple math. It's more technical than that, but I don't want to use crazy math than a lot of people. So now, the trader's risk profile is volatile, and it needs to be because traders they have a lot of losses and they have to win, right? In order to be profitable, your wins have to be greater than your losses, right? So the risk profile for traders, like when people say, I don't like to lose, there's some people who say they don't like to lose, right? But they also do not like the patience that it takes to not be a loser. See, and this is what I mean that you have to get to know yourself. These are one of the most important things that you need to understand when you start investing in cryptocurrency, right? So now the outcome is going to be so the outcome, this is a little bit, it was hard for me to make this decision. Investors are wealth builders, right? Traders are income producers. So you have to understand if you're somebody who can produce income with your investing, because it's a lot of work in trading. You have to be at your computer looking at those charts every day. See, me, I have other businesses that I operate. So these are one of the things that I always think about all the time is that I don't have the time to watch the market every day like a trader. And many people think that they don't have the time to invest. But no, what you're doing as an investor, you only make actions when your price targets hit a certain point. See, if you buy well. See, you make money when you buy and invest in, not when you sell. See, when the market comes down and you buy And then when it pumps up and the fools are rushing in, buying at all-time highs, like you see those lines with gold out there, I'm walking out the other way. This is what you need to understand. It's really not complicated. It's us as men that make things complicated, and women, we just overcomplicate things. We try to over understand things when it's just simple and straightforward. Buy value, buy low, sell into strength. It's just that simple. The mind is what makes it hard. Listening to the noise on the news and things like that when you're long. See, as an investor, I need the thing to do what I thought and heard what it was going to do. That's what you do, right? So now, my belief has to be your indoctrination if you're somebody who's going to invest with me, right? And see, I always say that if you know the market is volatile, it is a strength, right? So what that means is that if you know that the market goes up and down and it swings violently, like if you've seen this pullback recently, right? From 126 to, I believe it went to like 104, 102, or 103, right? You buy then. But the thing is you don't ape all of your money in like this is the bottom, because it might not be. And that's one of the things that I'm gonna make a video inside the community about buying the dip, right? A lot of people, everybody likes the wording, right? Everybody likes the word buying the dip, right? But no one actually focuses on the strategy on buying the dip, right? So like if you have $10,000 to invest and then the market crashes, right? And then you take all $10,000 and you invest it on that first dip, right? Now, you still had $10,000 to invest. But if the market keeps dipping and all you have was that $10,000, you're just watching it go lower. And then there's a different psychology that it takes to watch your $10,000 keep going down after you just put it in when you thought you were buying the dip even more. The strategy should be you only put a portion of that $10,000 in when it dips. I'm going to put $2,000 in now, right? Then if it dips again, put another 2,000 in. Then if it dips even lower or it goes sideways for a little bit and you still have that 10,000, you might want to put a little bit more in. That way, when the market recovers, you sell into strength, or your position now is much lower, right? So you're buying down on your position, like I said before. But again, I'm gonna make a whole video specifically about buying the dip, guys. This is about knowing your identity of an investor or a trader, right? So now, my 3C method. I call it the 3C method because there's 3 C's. You need to have clarity, confidence, and conviction. And the thing about it, it's the mindset. And it's very simple. If you chase dopamine, you'll never build the dominance. See, so you don't invest to look smart on Twitter, right? Or X or Threads or Facebook or Instagram or whatever it is. My strategy is for you to invest to buy your freedom. And you're also investing in your own demise. This is something that I talk about a lot, is that I talk about the fourth industrial revolution. I talk about the World Economic Forum because Klaus Schwab in that book was telling you the roadmap of where we're going. And what I'm telling you is many of you aren't prepared for it already. You don't want to read. You don't want to have patience. You don't want to learn anything new, maybe. But if you're here, you're trying to learn something new. I don't want to beat you up about it. But you have to be willing to learn. You're going to have to learn some organic skills, farming, canning, learning how to do things with less energy, less water. I'm telling you, all of that's coming. It's not dystopian. It's that, what do you think these data centers are consuming? What do you hear them talking about? And I know a lot of people like to talk about the elitists. All these people have all the wealth, but you somehow think that they're also going to care about you having the same adequate amount of energy and water. And then I don't want to get too far down the rabbit hole, but I just want to tell you that what we're doing by investing in cryptocurrency is something that I say is that we're investing in interaction. You're investigating through interaction. I'm sorry about that. You're investing in your own demise, but we do that through investigating through interaction. Meaning that instead of tucking your tail and be like, oh, this crypto, it's such a Ponzi scheme, it's such a this, I don't like it. And then I've been saying this for 5 years. It doesn't matter what you think, you're not a decision maker. People get so mad at me for saying that. Like you don't realize your space on the chessboard. That's what I want to wake you guys up about. You need to know your place on the chessboard. It's not bad. Know your role, play your position. It's like sports. If you the center, stay in the paint. If you a shooter, stay on the arc. If you're a guard, attack the basket. It's as simple as that. And I think because I'm an athlete, that resonates with me more. You have to know your position because it's all part of the team. And whether it's your family, your friends, your circle, whatever it may be, we're all on a team here. You got to know your position because we're in the big game now. It's going to literally be every person for themselves. And this is what I'm trying to get you guys to understand right now. We're in the end game, as they say. So now, how does my 3C method fix this, right? So now the clarity. Clarity is based off of Warren Buffett. It's know what you own and why. Because you can't be tricked out of your position if you know why you have it. Nobody can't tell me anything about Bitcoin because I've seen what it did for me. I was buying Bitcoin at $3,500, right? So when it crashes down to 70K, I'm up on my initial position. Not only that, I verified that is it permissionless, borderless, and censorship resistant. See, this is the things that you have to focus on, right? Because, see, no one invests in the technology, right? But they get wrecked because you're not investing in the technology. You're just watching the numbers on the scoreboard. See, you don't know how it works, so you don't understand what you're buying and what you have. Like, you ever hear the expression in relationships again? I'll bring it back. Man, you don't know how good you have it. You just lost a good thing. Happens all the time. This is what I'm saying. This is why you need clarity. You need to know why you have this asset, and then you have to believe it. How do you believe it? Is that you have to have confidence. How do you get the confidence in it? You have to be backed by merit-based narratives. Crypto thrives off narratives, right? So you have to understand that the narrative is what drives the market, right? The merit is whether you're being fed bullshit or not. That's what you have to understand. See, merit is when somebody tells you that somebody's going to use something, you go directly to the website. Maybe you go check out their LinkedIn profile to see if that person actually works at the place that they said they do. That's what LinkedIn is good for. Not everything has to be good like Instagram, where you do the lifestyle content. Sometimes you use social media for the merit base that it is. It may be boring, but we're trying to get the bag here. I'm not worried about looking cool. I'm worried about making that money. And I don't care if it looks like I don't have the bag to you. It shouldn't matter to you. What you're doing is building clarity, confidence, so you can have conviction, so you can put as much money as you possibly can in this market without losing your ass. That's why the 3C method works. And I'm telling you, it's been working for me. And then once I indoctrinate all of my mentees with it, see, I have to go. The reason why I should charge more for my mentorship, because trying to get some of you guys to understand the mentality of it takes a lot of work. Some people I don't even hear from them, right? But what I'm trying to tell you, right, is that once you have the clarity, the confidence and conviction, once you have clarity and confidence, you will be convicted in this. That's what I'm saying about Bitcoin. I had to prove that it was both permissionless, borderless, and censorship resistant. This is what I was trying to tell you guys. How do I know that it's permissionless? I didn't have to ask anybody to buy Bitcoin. I didn't even have to buy, I bought Bitcoin without even going on a centralized exchange. Had to ask no one. I did it myself. I know it. See, many people, they wouldn't do what I did because, that seed phrase, what do I have to write down all this stuff? Why is it asking me all these questions, right? That's why not everybody is meant to be not everyone is meant to invest in this technology the way that it's supposed to, because you've been indoctrinated to have everything convenient and simplified for yourself. See, that's what also I would love to wake you guys up about, is that the convenience is the reason why you're going to lose everything. Everything has to be easy for you. See, everybody always talks about the money being the Ponzi scheme. No one ever talks about the grocery store. How if they close their doors, see, COVID taught me that. If the grocery store closes its doors, right? What will you do then? See, how would you feed your family? Then what if they told you that only you can buy so much of this? They did that with the toilet paper during the pandemic, right? But it was toilet paper. They do it with bottled water during the hurricane season because there's hoarders. There's people that have bigger, more money than you. And then a lot of people say it, but a lot of people only buy, some people don't buy enough of what they need and they have the money. Some people don't have the vehicle to transport the amount they need. But that's not here or there. I want to state, but I just want the point that I'm making is that the convenience that once you realize that the permissionless is that you have to take responsibility and accountability. That's why I call it self-sovereignty. You're not asking the central bank to be a middleman, giving you $250,000 insurance because you don't know how to make sure your computer isn't plugged with viruses. You just click on every link that's in every email, open up every text. You don't have any operational security because convenience is how you get it. And then you want to talk about why the tech oligarchs, why Google, Meta, and Amazon all have all this data on you. It's because you don't want to do shit. That's why. And then you're mad at billionaires. No, they're exploiting people. No, 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 no. You're the one who's giving them everything. Even you're in there crying on their platform and you're mad at me for telling you it. Build a real community. Touch grass. See, you already value the digital world more than you do the physical world. That's when I realized it. That's how I made that investment in Facebook that I was telling you about. That was my clarity, confidence, and conviction when I bought that Facebook position when it was $96. When they was like, if you can delete this one thing from the world, and this is how I knew Facebook was a good investment, right? Is that they said that if you knew that somebody was like, well, let me get my thoughts together here. The reason why I knew that Facebook was a good investment was at the time, someone had made one of those engagement farming posts where if you could delete one thing from the world that could make it a better place, right? What would it be? And everybody in the comment section, I would say roughly 80% of the comments was social media. And they were commenting on the social media platform about it. So me being stoic, logical, and a little dry, I just go, if those of you saying social media, delete the app and you stop playing the game. And then everybody came, like most of the people were attacked. You can't tell someone to delete something, blah, blah, blah. Listen, I'm not telling you to delete it because I'm telling you what to do. The post said that if you believe that it's evil, and this is what I learned a lot about people in this, right? But more or less, I learned more about how good the product or the dope that social media is, right? Is that these people value the social media more than the real world. They think that it's evil, but wouldn't delete it from their own phone because everybody else has it. Maybe. Maybe some people don't. A fun fact is I don't have any of the apps on my phone. I record videos from the camera and then upload them. There's a lot of security measurements for it because I don't give all that data to them in real time. That's why I don't use the platform like that, right? So now, let's go to the next. So now, I want to talk to you guys a little bit about this 100x stuff, right? So everybody's always chasing the 100x. Now, for those of you, because this is the reason why this is good is when in the 3C method, if a coin's $10 million market cap, it needs to hit $1 billion to be a 100x. So then if you're investing in tier 3 and then it goes up to $1 billion, right? You made 100 times on your money. It doesn't need to even go to tier 1, just tier 2, right? And so see, traders, they bet on the speed of that, right? So, and it's like, it doesn't have to go to 1 billion if you're trading leverage, right? But as Charlie Munger says, there's smart men lose money or ladies, liquors, and leverage, right? So now what I want you guys to understand is that the 3C method is designed to guide you through the real math and not the fairy dust, right? I like that. I had to write that. So now I'm going to tell you all the warning signs that you are not an investor yet. And that's because you're thinking that you're a trader. The spray in prayers. You got 25 tokens, no strategy at all. Just every time someone tells you something is good, you buy it, buy it, buy it, buy it. You have no strategy. Then you even see me talking about building a strategy, and you don't even talk to me about getting on the one-on-one call and doing it and paying for it for my time. Why do I have to sit down with you and talk to you about investing to make you money for free? Make it make sense, right? So now another way that you could tell that warning signs in an investor yet, right? Is that you check the price 10 times a day. Like, bro, how do you know? What are you watching for? Like, and usually if somebody is investing and they looking at their phone that much, they may have invested too much money. That's usually a sign. And everybody's like, oh no, man, I just can't lose my money. You only lose when you sell. You only lose when you sell. I'll leave it at that, right? So now you bought something because someone on X, TikTok, Instagram, Facebook, some guy who is Mike James, he was telling me about Chainlink. I aped into it. When I make calls, I did my research. But if you come and try to tell me when is it going to be a Lamborghini, I can't tell you that. I can tell you Chainlink's a great investment, though. See, and then here's the other way that you know you're not an investor. You're a person who thinks that just setting $500 down in the meme coin and waiting for it to turn into the Dogecoin story, the fart coin story, the Trump token stories, right? And you think that is your investment strategy. And then here you are probably holding the bag on a meme coin that you invested $500 in. And then you see that your account says that you only have $26. There's probably many of you out there, right? I digress. So now, the way the 3C roadmap works, right, is when you look at the tiers that I have, and it's going to be tier one is anything that's above $10 billion in market cap, right? And what that is that's where the strength and stability is at, right? This is the Bitcoin, Ethereum's, XRP, Solana, BNB chain. All of those are up there in above the 10 billion. Put the majority of your money in those tokens if you're a beginner. Don't get cute. Capital preservation is first. We'll talk about this later, right? So now the tier two is that's where all the growth. These are projects that some of them have strong communities, strong foundations, right? But most of them are emerging projects that have a lot of promise. These are anything that's below 10 billion, above 500 million in market cap. Sometimes you can even bump that up to 1 billion, right? In between 1 billion and 10 billion, those projects have a little something to say, but they can still fall from grace, which is why they're at tier two, right? So now, tier three, this is the moonshots. This is why many people get into cryptocurrency. Why? Because this is where the big returns are at. Big rewards are in tier three. Anything below 500, nice liquidity, strong team, get nice tokenomics, and even strong narrative. And they have great partnerships already, right? That's something that you can bet the bank on when it comes to outperforming the rest of your portfolio. You want it to, but you use a little bit amount of the money to outperform the larger amount. And that's how I structure my barbell strategy in the 3C method, right? So you can get this method with the ebook inside of the community, guys. So now, what do you do if you want to still learn how to trade? If you want to trade, you need to learn that skill somewhere else because I don't want to teach people trading, right? And it's because all of the questions I don't have time for, right? I only want to help people become seven-figure investors like myself. And I did it over 7 years, but I actually made my first million in 3 years. So, and then that's the most important part. 3 years, you should be able to make $1 million with a consistent strategy, 100%. But you have to be consistent in your strategy and consistent in the compounding of how much money you're allocating, right? And then you got to get creative. So, also, if you want to learn trading, I recommend that you get some books on risk management, watch some YouTube videos on risk tolerance, risk management, And there might be boring to you, right? But you need to know thyself if you're going to trade. Trust me. And then you're going to have indicators, order blocks, but you don't want to confuse trading for investing because it'll wreck your portfolio. So, guys, this is the end of this video. And one of the most important things that I want to tell you guys is that you have to make the decision whether you want to be an investor or a trader, right? And the more and more you start thinking about these things and learning these things, you will start understanding how you can scale a portfolio from $14,000 multiple seven figures like I did. And the reason why this is important for you to understand and find out is because a lot of people don't have a time frame. A lot of people don't have any strategy. They don't have any plan. And you're out here in something that's a very highly speculative asset that will eventually require you to get wrecked, lose money. And so, with that being said, guys, if you're somebody who would like to build a portfolio with me and you're inside the community, jump on the call. It's only 200 bucks to build the portfolio. If you're somebody who wants a more hands-on experience or the sit down, the lunch type, right? Consider the mentorship. That's the gateway to have lunch. Sit downs is the mentorship because I have 3 businesses, 3 children, and a wife. So time is money. And if I'm going to make you money, help me make some money. All right, guys. So that's it, guys. And I hope you guys have a great day.